Dear ABC Life Insurance Company policyholder, we have bad news. Your policy is scheduled to lapse in 13 months unless you double your premium payments. Hi, I'm Ray Ohlson, President and CEO of the Ohlson Group, as well as Safe Money Places International. This little fictitious opening that I gave is truthful. This is happening all across America. Many policies purchased when people were 25, 30, 35, 40 years old, they're now starting to lapse at a time when people really want to keep them. Maybe they're 60 years old. Why did this happen? First of all, let me start out by saying that I believe we need to get back to treating life insurance policies as a manageable asset. Too many times, the life insurance policy is stuck in the sock drawer, never to be looked at again, until a person gets older and then they give their heirs, their estates, policyholder information, numbers to call in the event of death. Because when the client gets older, as you know, the question is not if you're going to die, but when you're going to die. We start to take a good look at our mortality. So what happens? Well, many of the life insurance policies, especially universal life policies that were purchased in the 70s and 80s, they were based upon interest rates that were up to 18%. You remember the days when you could get a money market fund, a money market account paying 18%, and also have great double-digit interest rates on your mortgages. Well, what happens? You can't get 18% today, right? So the insurance companies bring the rate of return that they credit on the policies down to the guarantees. And many times, in order to make sure that the insurance company can make money on the products in a UL policy, they are going to take the expense ratio to the very highest allowable by contract. Also, there's another factor in there, and that's the mortality cost. And the insurance company can, if they want, charge you the highest mortality rate. Because here's the deal. They know you want it right now. You don't want to let it go. They made bad assumptions when they issued the policies, and now they say if you want to keep this policy with ABC Life, you're going to pay the piper. Now, many times this also happens when a company is sold or they sell off blocks of life insurance business. Maybe a carrier wants to get out of the life insurance business, and you've seen them, you've read about them. I'm not kicking the life insurance companies to the curb, but what happens is when the acquiring company gets the block or buys the entire insurance company, one way they pay for the acquisition is by charging more to existing policyholders. So what's a policyholder to do when they get these notices? And I truly get these every day as we service thousands of policies. The insured has to make one of a few different decisions. The choices are this: pay up, and most of the time pay double, without even a guarantee that that will do it. But in most cases, to keep the coverage the same, they're going to have to pay double. The other choice is, I can't keep the $250,000 policy. What can I keep if I keep the same premium payment? The insurance company will come back and say, you can keep $75,000 or $100,000 of death benefit. So the insured says, fine. Now the insurance company is also off the hook for that additional death benefit, because the longer you keep that policy, they know that there's a great chance it will turn into a death claim. And remember, when a company issues a policy, they do not assume that they will all turn into death claims. I had the luxury, the opportunity to be involved buying 9 life insurance companies, merging some of them into others, and being president of our two U.S. life companies. The other choice is you just lapse the policy. You just lapse the policy, and everyone is cheering at the insurance company. Yes, they're no longer going to get the premium payment, but they're not staring the death benefit in the eye. There's another thing you can do, a life settlement. If the client is 65 years old or older, must be at least a $100,000 policy. There are people that will purchase the product. They will purchase the product, give your client more than the cash value that might be in the permanent policy, and they will continue the policy on until it becomes a death claim. And as a side note, it doesn't have to be a permanent policy. It can be a term policy. Now, what's the other more likely thing to do? Because insurance premiums and costs have decreased over time because of mortality improvement, the client can many times replace that policy. Even at age 60, replace the policy, keep the $250,000 in force, and do it on a guaranteed basis, forgetting growth in cash value, but a guaranteed death benefit product where they know that that death benefit will be there at the time of their passing. Another thing to consider would be to utilize cash value in these policies, thereby buying a single premium life policy, a one-time payment, possibly with accelerated death benefits that would also cover chronic illnesses. There's a myriad of things that we can do, but I go back to the beginning of the conversation. We need to treat life insurance as an asset to be managed. Get with your clients. You may not have even spoken to them about life insurance if you're in the investment management business, if you're in the income planning business. Tell them to get into their sock drawer right now. Pull out their life insurance policies and sit down. Because remember, with everything else that we do, there is nothing more important than the miracle of paper and ink. Your clients knew that with a piece of paper, a drop of ink, they put together a product that will last forever. They thought forever, because they didn't buy life insurance because they were going to die. They bought it because some that they cared about and loved would continue to live. Call us today, 877-844-0900. That's 877-844-0900, and talk with our marketing consultants. Let's help you help your clients and build another leg of predictable income for your business. Thanks for your time, and always thanks for your business. And until next time, good selling.